Hey there, investors. Welcome to the wild and wacky world of post-COVID Indian investing. Ever wondered what's cooking in the minds of post-COVID Indian investors? Well, you're in for a treat. Buckle up because today I'm diving into the hilarious and quirky thoughts that seem to be ruling their world. It's a roller coaster ride, so hold on tight. First off, there's this belief that any stock that doesn't at least double in a year is, well, a slow-moving stock. Yes, you heard that right. If it's not skyrocketing, it's practically standing still. I mean, if it's not rocketing to the moon, what's even the point, right? The mantra seems to be, go big or go home. And don't get me started on large caps. These giants of the market are now seen as the dinosaurs of the investment world. Apparently, they're the black sheep of the equity market, blamed for those subpar nifty returns. It's almost like they're the villains in this financial drama. Only small and micro caps create wealth. Because why play safe when you can play fast and furious? The thrill of the chase is what it's all about. Speaking of financial education, who needs a full course when you've got the magic metric PE ratio? It's like the Swiss Army knife of investing. Forget about cash flows, assets, or anything else. Those are just distractions. Forward PE is the holy grail. It's the crystal ball that tells you everything you need to know. Oh, and remember, it's always a good idea to buy the dip. Because, hey, what goes down must come up, right? Because it's India's century now. The optimism is through the roof. Just like it was for investors during the 2000 and 2007 boom and bust cycles. Oops, history has a funny way of repeating itself. From underwear to airplanes, the China Plus One strategy is real and businesses will just magically flock to India. No questions asked. It's the new land of opportunity. Increase in LTCG and STCG? Meh, who cares? Taxes are just a minor inconvenience. Long-term returns will be just fine. The future is bright and the sky's the limit. After all, we've got bigger fish to fry. And those FIIs? A bunch of jealous idiots apparently. Who needs them when we've got our own game plan? Let's not take them seriously. The real power lies elsewhere. The true power lies with retail investors. SIP numbers will keep soaring, at least until we start building colonies on Mars. No kidding. And finally, promoters? Low IQ folks sweating out for a mere 20% CAGR, while retail investors are doubling their money every 6 months. Easy peasy. But hey, before you go betting the farm, take this video with a healthy dose of humor. Investing is serious, but it doesn't have to be boring. And always keep an eye on those operating cash flows over PAT numbers. Happy investing. Remember, a little knowledge and a lot of humor can go a long way. So stay informed, stay cautious, and most importantly, stay entertained. Happy investing.